We are awaiting Hillary Clinton about to speak on national security. She is here in New York City. We will bring it to you live when Hillary Clinton does come out to speak. Now, we want to talk more about how to protect your wallets. It was a really nasty day in the markets. We've got Veronica Dagher of the Wall Street Journal and Jonas Max Ferris of MaxFunds.com. Jonas, let's take it to you. This felt like the beginning of the year when the Fed did raise interest rates, and we had that more than 1,400 point sell-off in the beginning of the year. It was the worst beginning of the year in a very long time. Is it feeling like that all over again? We could have a late summer swoon, early fall swoon right now?
It will. In all the hot areas where all the money's been going, I think you're definitely going to see a bigger pullback than we've already seen in recent weeks. And what I'm talking about is basically with the Brexit collapse, interest rates went really low, even lower than they've been globally, and that pushed the value of assets up, even though there's no real fundamental reason besides low interest rates for that to have happened. It overshot, just like it overshot on the way down. And then a lot of money went into utilities and telecom and emerging market bonds. That's where the real hits are in the low volatility play, which got very popular with retail investors as a safe way to be for the next downturn, is actually looking riskier than being in, say, the NASDAQ or biotech stocks. I mean, so what you really want to avoid is the yield reach that went on because of the really low rates, not so much into like long-term investment-grade U.S. bonds, but like foreign bonds, junk bonds, high-yield stocks. That's the real hit areas.
Okay, I hear you, Jonas. Veronica, what the investors out there, boy, they're taking a look at their 401ks. They're saying that was a really nasty white-knuckled ride. The markets have been trading in a pretty tight trading range. It's getting emotionally wider trading range. So they really might be scared out there. What should they expect on Monday? What do you think is going to happen?
I think what they should expect is more volatility between now and the election. We're going to see a lot of ups and downs. We've got the interest rates question in play. We've got the election question in play. We've got what's happening around the world. All the different economies around the world are not doing so hot. Other things like North Korea freaking people out. So expect a lot more volatility. And you brought up a good point about people's 401ks. This is another reason why you shouldn't be watching your 401k every day. Resist that temptation because things are going to go up, they're going to go down. You need to be in it for the long term. Stick to your long-term plan. If you have a certain stock allocation, this is not the time to be messing around with it. Hold the course. Don't be putting new money to work. Don't be pulling back at this point unless you're not sleeping at night. But generally, stick to your long-term plan. If you don't have a long-term plan, now is the time to get one. And focus on the things you can control, like how much you spend every day.
You know, Jonas, let's get back to the asset classes, meaning the investments that were really hurting. We just showed the gold, the action in gold. Of course, as the dollar strengthens, gold goes down. People were pouring into gold, Jonas, as a safe haven. What's happening here?
They're also pouring into it because rates were very low, and the play has always been, well, they're making rates too low. It's going to cause inflation someday down the road, which is never going to happen at this point. The problem is that today's fear was largely related to this rate game being over, that the central banks are going to start raising rates. We're now seeing positive rates in countries that had negative rates a few weeks ago after the collapse. And that makes gold less attractive. We might see an interest rate increase as soon as September, maybe at this point, which
Jonas,
is not expected.
I'm going to ask this question to both of you. Do you think the market's in a bubble, Jonas? I'm going to ask Veronica the same.
I think the yield reach assets and the safe assets are overpriced.
Okay, you think the market's in a bubble?
For the rest of the market.
We're not in a bubble?
Not for the whole market as a piece, but I think certain assets are definitely overpriced.
Got it. What do you think, Veronica?
I would agree with that. I think certain aspects of the market, but overall, not yet.
Okay, gotcha. Thank you, Veronica and Jonas. Really expert advice there. Really appreciate it.